1947 was one of the best years in Metropolitan's history. The company's financial position was excellent. More Metropolitan policyholders than ever before enjoyed the blessings of life insurance. Through investments, the company played a bigger role than in any preceding year in helping keep the wheels of industry turning, provide jobs and homes, and maintain high standards of living. Our program of health education was expanded, helping more people to keep well, to live longer, happier lives. The death rate among policyholders in 1947 hit an all-time low. However, the year was not without its problems. Insurance costs were higher because of lower interest rates and because of the prevalent increase in the cost of goods and services. In 1947, Metropolitan's payments to policyholders and their beneficiaries, shown by the bar at the extreme right of the chart, topped all previous records. Payments totaled $671 million, $41,500,000 more than in 1946, and a gain of $138 million over the figure 5 years ago in 1942. In the past 10 years, the company's payments to policyholders and beneficiaries totaled $5,900 million, a lot of money that went to a lot of people all over the United States and Canada. The blue columns at the left show the amounts paid in death and double indemnity claims from 1930 through 1947. Last year, such payments totaled $243 million, money that helped lighten financial burdens, gave hope for the future, helped keep many homes together, and fulfill plans and ambitions for loved ones. The remainder of the 1947 payments to policyholders, about twice as much as was paid out in death benefits, went to living policyholders. Incidentally, you might be amused to note that all these checks are signed by two names, Washington and Lincoln. I assure you this is purely coincidental. These payments, amounting to $428 million, served a countless variety of needs. For example, they include $127 million in matured endowments, funds which help many young men and women get a college education, provide others with business capital, help in buying homes and meeting other vital needs. The $73,700,000 paid last year in cash values of policies helped supply immediate funds to many families who, for one reason or another, cashed in their policies. There was a great difference between the volume of surrender value payments in 1947 as compared with those of 1933. While our insurance in force in 1947 was over twice as great as in 1933, the surrender payments amounted to less than 1/3 as much. The upward trend in dividends paid to Metropolitan policyholders over the years reflects a growth in the amount of business and not increased scales of dividends. Actually, during the period covered by the chart, dividend scales have been reduced and are being reduced in 1948, primarily as a result of declining interest returns on investments. During 1947, $148 million were paid or credited to policyholders in dividends, thus, of course, decreasing by that amount the cost of their insurance protection as represented by their premium payments. Nearly $80 million went for sickness and accident benefits, annuity payments which help policyholders enjoy the sunset years of life, and other payments to policyholders and their beneficiaries. While the $671 million Metropolitan paid out last year brought security and lessened worry for thousands and hundreds of thousands of people, it represented only a part of the company's responsibility to its policyholders and beneficiaries. Each year, the company must set aside sufficient funds called reserves which, increased by interest earnings and future premiums, will enable it to pay all obligations under policies that will fall due in the years to come. The law recognizes the necessity of such reserves and requires that they be maintained. These reserves, plus funds in process of payment to policyholders and beneficiaries, together with miscellaneous liabilities, constitute the company's total obligations, about $8.049 billion as of December 31st, 1947. To meet these obligations, Metropolitan's assets at the close of the year amounted to $8.548 billion, an increase of about $503 million during 1947. It is then seen that the assets exceed all liabilities by $499 million. This is a safety fund, which is available to meet unforeseeable contingencies, such as the epidemic we had in 1918-19, or stormy economic weather, such as the Depression in the 30s. Metropolitan's asset dollars are kept busily at work in sound investments. However, these are trust funds, and the company's first consideration must be safety of principal. As a result, we do not put money into investments of a speculative nature, such as common stocks, for example. But while Metropolitan's dollars are working for policyholders, they are benefiting all of us, helping provide jobs and the goods and services we all need and want. At the close of 1947, the biggest share of the company's investments was in United States and Canadian government bonds, a total of about $3.8 billion, accounted for by the heavy purchases made during the war years. Since the close of the war, Metropolitan's new investments have gone increasingly to help meet the needs of industry and the community, just as they were doing before the war. Over the years, Metropolitan has helped provide productive enterprises with tools and facilities through the investment of the company's funds. Last year, we put $958 million into such investments, refunding operations and the purchase of securities which had been issued in preceding years. At the end of 1947, more than $2.6 billion were helping in the expansion and further development or maintenance of productive techniques and enterprises. Few policyholders realize that each of the tens of thousands of concerns or individuals using Metropolitan's invested funds are really working for them. The interest the borrowers pay on the money is helping to reduce the cost of insurance to all policyholders. Without it, premiums would have to be substantially higher. The company's dollars are at work in practically every phase of production and distribution, helping to produce more goods and create more jobs for more people. In concerns like these, for example, in which the company made investments in 1947. Some of the plants in which Metropolitan made investments last year to help furnish power, light, and heat to meet the nation's needs. Electricity, natural and artificial gas, the telephone, and other utilities have played an important part in our industrial progress. The company's total investment in utilities amounted to $999 million at the end of the year. At the close of 1947, more than $538 million of Metropolitan assets were helping in the vital task of transporting passengers, and bringing the necessities of life from mines, farms, forests, and factories to people throughout the United States and Canada. During 1947, the company continued to help meet the national need for housing, for individuals and for business and industry. Mortgage loans made last year on city and farm properties totaled more than $221 million, bringing the total outstanding at the year's close to more than $964 million. Of this amount, $878 million was in city properties and $86 million in farm properties. During the Depression years, the Metropolitan, like other financial institutions, was forced to take over a large number of properties to safeguard its investment, which had been made for the benefit of policyholders. Note on the chart the peak in 1935, when the company was the involuntary owner of 20,729 city properties and 6,528 farms. Many of these properties were in a rundown condition, producing little or no income. To meet the situation, Metropolitan undertook a broad program of rehabilitation. Buildings, lands, and equipment were put on an income-producing basis and in saleable condition. This program had a stabilizing influence in many communities and was widely acclaimed. As the program progressed, properties were disposed of as rapidly as possible, and in 1947, the last of the 10,414 farms which had been acquired as a result of the Depression was sold. City properties unsold at the end of the year numbered only 42. In the midst of a previous housing shortage in 1922, Metropolitan undertook, on an experimental basis, its first housing project in the borough of Queens, New York City. With the background of this experience, the company in 1939 started construction of Parkchester in New York City, the largest housing project ever built in the United States. This was followed by another project, Park Fairfax, just outside of Washington, D.C., which helped meet an acute wartime housing shortage in the nation's capital. Still other projects, Park Merced in San Francisco, Park La Brea in Los Angeles also helped meet wartime housing needs. In 1943, the company turned its attention to providing low-cost, modern housing in a blighted area in the heart of New York City, an area known as the Gas House District. As these views show, many of the dwellings here were 75 years old or more. There were no parks or playgrounds, and children found their recreation in the streets. Most of the dwellings were small, dark flats without windows in the bedrooms. no closets for clothes, and grossly inadequate in sanitary facilities and other modern necessities. As soon as the families who lived in this section were relocated, demolition began. It is interesting to note how this was accomplished. For example, a 2,000-pound steel ball helped reduce the row-on-row tenement houses to rubble. Out of this rubble grew Stuyvesant Town, a group of modern apartment buildings. The grounds will be artistically landscaped with plenty of parks and recreational areas, as in Metropolitan's other modern housing projects. When the project is fully completed, 8,755 families will find here attractive, comfortable homes with a maximum of sunlight and air and at moderate rentals. 2 other new metropolitan housing projects in New York City, Peter Cooper Village and Riverton, have also received their first tenants. Housing, as instituted and developed by the genius of the chairman of the Metropolitan's Board of Directors, Frederick H. Eckert, has proved to be a sound and satisfactory form of investment, as well as an important social contribution. With the completion of present projects, the company will have an investment in housing of about $300 million, and a total of more than 130,000 people will be housed in attractive, modern, metropolitan apartments. As everyone knows, the interest rates that can be earned on invested funds have declined steadily over a period of years. In the late 1920s, Metropolitan earned an average net interest return of more than 5%. Since then, following the general trend, interest rates on the company's investments have dropped to substantially lower levels. During 1947, the average net interest earned was 2.94%, compared with 3.01% in 1946. It is encouraging to note that the average rate of interest at which new investments in securities were made, for the first time in recent years, turned slightly upward during the last part of 1947. It is entirely possible that the low point has now been passed, and a gradual improvement in the overall interest earnings may be forthcoming. Interest earnings last year contributed more than $234 million to the company's income. But if the rate of interest earned in 1929 had prevailed last year, our income in 1947 would have been about $180 million greater, and this would have greatly increased the amount available for dividends. Metropolitan's income is received from 2 sources. First, premiums and other payments from policyholders, and second, earnings on investments. In 1947, the company's income amounted to nearly $1.4 billion. Out of this income, more than $1.160 billion came from policyholders, and about $235 million from earnings on the company's investments. As compared with this income, more than $671 million were paid to policyholders and beneficiaries, and more than $473 million were set aside for future obligations. Thus, a total of $1.150 billion were paid or set aside for the benefit of policyholders and beneficiaries, including about $5 million for health and welfare. The balance, $247 million, went for taxes, asset adjustment, and the expense of doing business. Taxes took about $22.5 million, asset adjustments about $20 million, and the remainder, more than $204 million, was used to provide the necessary services which Metropolitan policyholders expect and to which they are entitled. The cost of insurance is determined not alone by premiums, but also by any amounts returned to policyholders as dividends. Dividends, which in a mutual company like Metropolitan are paid to the policyholders, represent the excess of the company's income over its outgo for expenses, claims, and additions to reserves and surplus. Variations in outgo result primarily from changes in death rates among policyholders and in the cost of doing business. Variations in income arise chiefly from changes in interest earnings on investments. A few words about these may be of interest. Improved mortality among policyholders has tended to reduce the company's outgo and has had a helpful effect on dividends and the cost of insurance to policyholders. The general upward trend in the cost of all goods and services has caused Metropolitan's expenses to rise and has increased the cost of insurance. As indicated previously, because of lower interest rates, income from investments has contributed a smaller share of the company's income dollar, with a consequent adverse effect on this source of funds available for dividends. Last year, the net effect of interest rates, mortality experience, and the cost of doing business will permit the company to pay in 1948 a little larger amount of money in dividends than it did in 47, but will require downward adjustments in the scales paid on most classes of business. They will be decreased, particularly on old policies which were issued on a 3.5% interest basis. Last year, more than 2,300,000 people expressed confidence in the Metropolitan organization and in its agents by buying Metropolitan policies. Many were old members of our family, who thus reaffirmed their faith in the company, and thousands were new people who joined us, bringing the total of Metropolitan policyholders to 32,384,000. The amount of new business written in 1947 was the highest on record, with the exception of 1946. The total insurance issued during the year amounted to $2,895 million. Of course, each year, some policyholders are forced to give up their life insurance. From an all-time high during the Depression in 1932-33, Metropolitan's lapse rates fell steadily to a low point in 1944. Post-war readjustments naturally tended to increase lapse rates slightly, but they remain at an encouragingly low level. Economic conditions are reflected also in policy loans. The volume of the company's new business, together with favorable termination rates, resulted in a substantial increase in Metropolitan protection. At the close of 1947, ordinary insurance in force amounted to nearly $18,800 million, industrial to about $9,700 million, and group to about $8,800 million. These added up to the greatest amount of life insurance in force in Metropolitan's history, a total of $37,256 million, $2,834 million more than the 1946 figure. In addition, policyholders had accident and health protection that provided $40 million in weekly benefits and $2,500 million in principal sum benefits. In addition to life insurance, the group division offers several other kinds of employee benefits. These include annuities, accident and health protection, and benefits to help meet hospital and surgical expenses. The only common basis for comparison of these varied types is in the amount of premium payable. At the end of 1947, the total group premium payable was $253 million, more than double the amount payable 5 years ago, and an increase of 54.7% during the past 2 years. A continued growth in personal accident and health insurance is shown by an increase of $1,101,000 in premium income for 1947, bringing the total for this type of protection to $10,900,000, a new high record. The percentage of health premium income out of the total for both accident and health has been constantly increasing. This perhaps indicates that field men are capitalizing on the increasing public interest in complete protection against sickness and accident. The progress in increased protection for policyholders achieved in 1947 directly reflects the excellent work done by Metropolitan agents during the year. It testifies to the outstanding accomplishments of our field force in 1947. Each of 7,374 agents was instrumental in bringing to policyholders more than $100,000 of new ordinary insurance during the year. These members of the $100,000 club make up 36.7% of the total field force. While there was a slight falling off in the average annual premium in monthly insurance, all other classes of business increased in 1947, showing evidence that Metropolitan agents continued to sell large policies during the year. During the year, more group sales were placed through the agency field force than ever before. The 2,447 such sales in 1947 compared with 1,994 in 1946. 71.6% of the total 1947 sales of group field men were placed in cooperation with agency field men. These figures tell a graphic story of the splendid cooperation between the Field Management Division and the Group Division, and contributed to the increased commissions of Metropolitan agents. In 1947, the average income of our agents continued to improve and reached a new high of $85.10 a week. This figure compares with $82.44 in 1946. These earnings are believed to be the highest in the business for any comparable group. During 1947, Metropolitan continued its efforts to improve health. This form of investment has always proven sound and has yielded a good return in contributing toward lengthening the lives of people in the United States and in Canada. From the time of the Roman Empire down to the year 1900, the average length of life increased from 22 years to about 49. A gain of 27 years in 20 centuries. Since 1900, however, the average expectation of life has increased to more than 66 years, a rise of about 18 years in less than half a century. Metropolitan believes that if the public could be better educated to apply up-to-date knowledge as developed by medical science, life expectancy could be still further increased. Since 1909, Metropolitan has distributed health booklets containing the best medical opinion obtainable on various subjects at the rate of about one every second. In addition, to help educate the public on health and safety, Metropolitan advertised once a month in national magazines last year, which had a circulation of more than 33 million. 1947 marked the 25th anniversary of such educational activities through advertising. The company also used the radio in 1947 to bring its good hints for good health to millions of radio listeners. It is interesting to report that during the past year and a half, over 400,000 requests for copies of Metropolitan's health booklets have been received in response to such programs. Of course, no report of our health activities would be complete without a word about our educational activities through motion pictures. Such pictures in 1947 were shown to about 4,475,000 people in 31,616 showings. Last year, a film on heart disease, the leading cause of death, was completed and had its premiere in Radio City Music Hall in New York City. Another part of our health conservation program is Metropolitan's Visiting Nursing Service, designed to help those insured under the company's group, intermediate, and industrial policies. The nurses are really angels of mercy, for they bring hope and optimism, as well as skilled visiting nursing care, not only to eligible policyholders, but also to those who suffer during general disasters. When disaster struck last year, as in the Texas City explosion, and the Mississippi Valley and New England floods, Metropolitan's nurses were promptly on the scene, helping the local authorities by rendering first aid and other emergency assistance. In 1947, our nursing service reached an important milestone. It completed the 100 millionth visit since the inception of this service in 1909. During the year, the company's visiting nurses made more than 1,765,000 visits in the nearly 7,400 communities in the United States and Canada where the service is available. That the activities of medical science, public health officials, and various private organizations have been getting results is obvious from statistical evidence. On this chart, note the decline in death rates from specific causes of death since the start of Metropolitan's first campaign against each cause. Deaths from children's diseases, measles, scarlet fever, whooping cough, and diphtheria have dropped 98%. Deaths from tuberculosis have dropped 85%, and pneumonia 68%. Since 1930, there has been some improvement in the death rate from cancer and from diseases of the heart. However, diseases of the heart still lead all causes of death by a wide margin. During 1947, the Life Insurance Medical Research Fund, which is maintained by 151 life insurance companies, including the Metropolitan, made substantial grants to finance research projects relating to the diseases of the heart and blood vessels. The growth of life insurance is a tribute to the private enterprise system. This has been encouraged by sound government supervision. In accordance with the laws of various states in the United States and similar legislation in Canada. To help achieve maximum safety, various regulatory laws have been adopted. For example, New York requires the state insurance department to make an examination every 3 years of companies domiciled there. The insurance departments of all states participate in these examinations through a committee of the National Association of Insurance Commissioners. Such an examination of Metropolitan, requiring a staff of more than 30 experienced examiners, was completed last year. It took about a year and a half. The examination covered the company's financial position, its income and outgo, the treatment of its policyholders, and many of the principles and practices followed in the conduct of its operations. The results of this examination were published last September and filled 303 pages. The report contains much interesting information. For example, let me quote 2 excerpts from its conclusions. The examination of the Metropolitan Life Insurance Company indicates that it is in a sound financial condition. Policy claims are paid promptly, and fair and equitable treatment has been accorded policyholders. Each year, life insurance companies must submit to the insurance supervisory authorities a full report of their operations. Metropolitan's report for 1947 fills about 200 printed pages, each about 3/4 of the size of a newspaper page. This report must account for every penny of income and outgo, as well as give a complete record of all property and other assets in the company's possession, and a detailed statement of obligations. The report becomes a public document. Metropolitan's operations are an open book, and the company makes every practical effort to have them understood by policyholders and by the public. A few illustrations may be of interest. Each year, a report is made to policyholders on the high spots of the preceding year's activities, and published copies are provided for all who are interested. A condensed report is also prepared for those who prefer a summary. In addition, newspapers with a circulation of 42 million published last year's Metropolitan annual advertisements, which told of its financial condition and invited readers to send for copies of the published annual reports. As we realize the importance of having those associated with Metropolitan understand the overall operations and achievements of the company during the year, there also was published last year the customary annual report to employees. In addition, there was prepared a 30-minute sound motion picture entitled A Family Portrait, which gives a broad, interesting picture of the overall basic operations of the company. Prints of this are available for showings by various local organizations. I am glad to report that last year there was completed another phase of our open book program, a history of the company entitled Metropolitan Life, a study in business growth. This was designed to help our policyholders and others to learn about the history of Metropolitan and to get the background for some of the current management policies. Prepared by Marquis James, the distinguished author and historian, and twice a Pulitzer Prize winner, the book is a neutral, objective portrayal of Metropolitan. I wish that all our policyholders could have an opportunity to know of the wholehearted and faithful service rendered by our agents, by the staffs of the district offices, and by the employees in the head office and in the home office, a combined total of more than 45,000 people. Frequently, we receive commendatory letters from policyholders regarding Metropolitan employees. We appreciate them and wish it were possible to bring to the writers, and in fact to all policyholders, a picture of the complex organization which is necessary to assure efficient service. In order to help the public understand the significance of the efforts of Metropolitan personnel, and because the public comes in direct contact with agents, we featured the agent again last year, as Metropolitan has done on other occasions, in an advertisement in several prominent magazines. You cannot read this advertisement without realizing the importance of the day-by-day contributions which life insurance agents make in the lives of millions of people. In some respects, our agents are really the company to policyholders, but without the able services of the employees in the field offices and the home and head offices, Metropolitan's high standards of service would be impossible. We really have a great organization and can justifiably be proud of its achievements. In fact, the growth of the company in public esteem reflects the efforts and loyalty of Metropolitan's men and women, 9,191 of whom have been in our service for 20 years or more. We are looking forward to further progress in the years to come and to the continued achievement of the high ideals of service which Metropolitan constantly strives to provide for its policyholders. And so, we close the story of our 1947 stewardship, grateful for the confidence of our policyholders and for the opportunity to serve them, and most appreciative of the wholehearted efforts of our organization to fulfill our obligations with fidelity and efficiency.